Okay, great. For those folks who don't know me, my name is Leon Griggs, and I'm the president of Freedom First Real Estate Investment Association. Glad to see all the people here in the room, and also very happy to see the people on Zoom. Um, to good cause eviction, and I guess a good starting point would be there's really nothing good about it if you are a housing provider. It will change our real estate investing landscape in ways that is just unbelievable. I mean, most people don't realize the difficulty that exists right now to have a bad tenant continue to stay in your property and not pay. And that was true before the pandemic. During the pandemic, it was a nightmare. And if we go forward with what's being outlined now for a city council to vote on, it will make the pandemic look almost like nothing. You know, the moratorium that was in place, I'll speak for myself, right before the moratorium took place in October of 2019, I actually started an eviction on someone. So, and I do have these dates right. In May of 2021, I was lucky, and the people decided to leave. I had tried all that time to get someone evicted, and that's prior to good cause. Certainly it was during the pandemic, but what happens is for most landlords or housing providers, as we prefer to be called now, it's a situation where we're no longer, even today, we're really in control of our properties that we pay the taxes on, that we fix up, that we allow tenants to live in many cases when they pay no rent because of the fact that, well, if you're a true housing provider, you're doing it because you really want to help people. I mean, certainly a part of it is that you need to have your money to make the payments and that you need to, and it's just a source of income for most of us. But even if you go back 10 years and you think about how things work, 10 years ago, it would still take you 3 months to get someone out. So now with good cause eviction and all the items that's outlined there, it's going to create a situation where it's going to be very, very tough for housing providers to survive and be able to just have it make any sense whatsoever. It's probably the best way to say it. Did you have a question?
Yeah, who's pushing this?
It's being pushed by the tenant unions, and it's been put in place in, of course, New York City and in Albany. And so right now, there are 3 city council members who are really pushing to have this law be put in place in the city of Rochester. So if you go to the website and basically, this is our website. If you go to the website, you will see several meetings that are coming up. And one of the most important things for you to do, and that's the reason why I'm talking about this right now, is you really need to contact your city council member and let them know. And when I say your, if you live in Monroe County, it's your. Okay, because all of the things that we're talking about is going to impact real estate across our area. It's not, well, I have property and it's located in a running court, so it won't make a difference. It will make a difference because it's going to impact things broadly. So on the website, you want to sign up to speak on the 15th. Now, the way this is going to work, this is my understanding, it could be wrong, but on the 15th, they're going to hear speakers. Tonight, part of the folks that would be here are not because they're on a Zoom call providing input to the Rochester City Council. So that's going on right now as we speak. And on the 15th, it'll be a similar type of things. You can, as this outlines there, you can send in a letter. You can go and speak in person. You can. There's several options. Let me not try to go through them, but there's several options that allow you to get input to City Council. I'm going to say it this way because I really mean it, and that is everybody who's sitting in this room should be providing input to City Council. Okay, so it's one of those things where I have to be politically correct here now. There are individuals on City Council that really have this inner feeling that there are tenants who are being mistreated, and they really are rallying around that particular cause that they have and that they see as issues. And one of the common comments I make is the devil is in the details. When you really start looking at how things are structured and how things work today, you will recognize very quickly that the things that are being done is going to enable people that should be probably taking a different approach in life, for sake of better words. And I'm not going to go into a whole bunch of details. I can take me down a rat hole real quickly. So the main thing here is please look at the information here and choose a way of connecting with City Council and the members of City Council and make sure that they understand your position as a housing provider. And that just a little editorial, it'll be nice if they never get to the point where they need to be sued on this particular item, and that they recognize that the most important thing for them to do is to put this on the back shelf somewhere and then strike a match to it. So I agree with the comment that was just made. Yeah, I mean, certainly I expect that there will be many suits that are going to take place, but good cause eviction is in place in Albany and has also been in place to a large extent in New York City. So my preference would be that it never made it beyond where it is right now. Steve was the one who made the comment that I could talk a little bit. I'll make it brief as we get started here. So we'll start off with what is private lending and why would one want to do it? So private lending is one of those things where I guess the simplest way of thinking about it is that it's private, therefore not institutional. And it's one of those things where it's private to the extent that it's up to you and whoever that private lender is, how you structure it, just so you stay within the general requirements of the law. And we have Steve Peterson over here, who's an attorney, and he'll help us out with some of that as we go through the discussion tonight. But I know for myself, private lending started, it actually started because even though I was the president of Freedom First, I was also a member, and another member told me about it and said, you do rehab, so why not consider doing using some private money so that you can do more projects. So that person was Joe Lababera. And that was, I don't know, probably 6 or 8 years back. But that was the beginning. Before then, I didn't have a clue. And the reason why most of you are here today is so that you can find out more about it. And that's what our objective is today, is to try to make sure that you have an understanding so that you can find out whether or not it's something you're interested in doing. So now, why would you be interested in doing? Why private lending? It's because it allows you to do more projects. It allows you a higher level of flexibility around which type of projects you want to do. And it allows you to be more efficient and effective from the standpoint that you can do many, many more and build your skill set in other arenas. So, go ahead, Mark.
Yeah, I'd like to add to that on Mark. Also, what I find people ask me is that the banks take a long time to close on a mortgage. So many times you have a property and you need somebody to get you money in a week, okay, or 2 weeks or even sooner. So private money lenders do that. And also, a lot of times the commercial banks will not lend you money based on the property condition. Okay, that you if you have a major rehab, they're not going to lend you money on that because the value isn't there at that point in time. So with those things in mind, you know, if you want to expand upon your projects, at least people that work with me, they come to me to borrow money, and then they expand their projects so they can do more projects.
Yes. So let me go ahead right now and introduce the panel. I think we know Mark. This is Mark Kaminsky with New Light LLC. And then over to my right here, we have Michelle Wheeler. And Michelle is with High Falls Real Estate Holdings. And all these folks have been around for a while doing real estate investing and working as private lenders. And then the third person is Joe McGuire. And Joe McGuire is High Falls Capital, LLC. He uses that entity to do some of his private lending. And we also have Steve Peterson. He's Esquire. He's an attorney associated with Peterson Spederico LLC. So this is our panel this evening, and we're gonna take a little bit different approach here. I mean, we're gonna probably I can ask them questions at any point in time. You can ask questions, and as we just talked about, Andy is going to basically be able to get questions from Zoom, and as well as sort of help us as go through the steps here associated with this. So Michelle helped us by providing documentation that she uses when she's doing private lending, and everyone should have a copy of that. And so it really represents some of the things that Michelle looks for when she's, for sake of better words, vetting a private lender. And so you should have that, use that as a reference. The other two private lenders here, Joe and Mark, I mean, basically they have a process that they use. And so, but Michelle's items that she's outlined is a good example for people to use as a reference. So I'm going to start things off with a question, and then we'll sort of let individuals in the audience ask a question if they want to, and what I'll do is if I need to, I'll sort of go to my list and we'll go from there. So first question and we'll sort of go around and let each one of the individuals, private lenders, address it. And it's, what are your general requirements for providing private funding? And so why don't we start off with Michelle, and then we'll go across.
Hi. So I think the general requirements, which I did outline in the packet, they do vary from borrower to borrower, and it really depends on the borrower, the property, the relationship, the length of time that they've been a client of ours, some basic, my husband and partner, Alex, works with me. We look at the properties. So it's a partnership, and we need to make sure that it works for both sides. We also need to make sure, probably number one, is that we have an exit strategy. So we want to make sure that the property, the loan amount, the property value exceeds the loan amount, so that we're protected. I mean, there's general requirements for each type of loan, loan to value, the clients, and then, of course, everybody pays lender fees and closing costs. Those documents I did put in this packet as well.
Michelle has outlined very well a lot of the lending guidelines and requirements that she would want. And she did a great job. It's the private lending guidelines thing. And I think most importantly, and I think we all agree with that, in fact, Mark recently had a transaction fall through because we discovered that he was not going to be in first position. There was just a miscommunication, and what does it mean to be in first position? It means that until you give that mortgage, the property is free and clear, and the person lending the money is going to be the first mortgage holder. They're going to be the bank. When we talk about what private lending is a human being acting as a bank instead of going to a bank. And that's what these are, 3 banks right here.
Yeah, my kids think so too.
I would agree to that.
Having just bought my son a home.
Well, excuse me.
Go ahead.
What would be the usual amount of interest? Is there a time limit on it?
Our loans typically go out a year. That gives the the rehabber enough time to do the project, we feel, but it also keeps it on their radar. So they're just not, well, I got the money, I'm just gonna let it sit here, okay, and I'll get around to it when I get around to it. So most of our projects are ready in 6 to 9 months. With COVID, probably 30–40% of the projects have gone over, and we've extended. I'll talk more about a little bit later about what to do when something goes wrong in the relationship. This is very important to, like a private lender. A couple of things we look forward to is, do you have rehabbing experience and how much? Okay, that's important. If you don't have rehabbing experience, we will recommend, and we do, to get some help from someone that you know, or someone that is willing to help you. Sometimes they charge, sometimes they don't. If they charge, there are some lenders like us, we're willing to put that in the mortgage. Okay, so our stance is we'll try to fund as much of the project, and there are varying opinions about this. Steve is my attorney, and the one time I got in trouble was because I didn't follow his advice. But he has a different opinion of ours, and we don't always require the rehabber to put money in, skin in the game, so to speak. But if you have skin in the game, see, our feeling is your skin in the game is you're going to be not only hiring people, but you're going to be doing the work. Okay, it's going to be your project, and we're going to size you up with references and your credit report, and size you up that you are the individual that is serious about doing this type of work to get ahead in the world. I mean, that's why we're all in this business, really. And so we look for that. So we look for a mentor if you don't have the experience. We really highly recommend you get a mentor to take you through this, and there are various stages you can go to. You can have a mentor at this level where you're asking them everything, and you can have a mentor at a lower level, that you don't have to be quite as involved with. And I work with people that are mentors, like I've worked with Leon on some projects, and we've taken a relatively new person and and he knows more about the rehabbing end of it, and I've done private lending. And the private lending, from our point of view, needs to be, one of the criticisms of private lenders is this guy's always changing his terms. You know, and we had a discussion, and he wanted this amount of money. Now he wants me to throw in another 10 grand. Okay, so when you look at a private lender, you want to sort of size them up and see what kind of a lender are they. And if they're more professional, like the people you see up here, these type of people are not going to go into that. If you go to a private lender, you could go to a private lender who has a 401k and wants to earn more money on it, and that's fine. But you have to realize that they're not necessarily a professional private lender, and you have to get these items established up front so you don't get part of the way into the deal. You got legal costs involved, etc., and all of a sudden the rules of the game keep changing. So you want to try to avoid that. The other thing that we require up front is if there's cash flow in the project, we have some of our projects that are buy and hold. If you're getting cash flow, we want our pound of flesh too. We want the interest payments. If you're not getting cash, and this is different. Other private lenders are different on this. If there's no cash flow, we expect the project to be done on a timely manner to go on to the next one, and then we don't expect those interest payments. And that's important for you guys to know, because you have to have the money to pay those interest payments. The ARV, which is after repair value, we require 130%. So if you borrow $100,000 for us, let's say you want to buy the property at $70,000, you want to put 30 into it to rehab it, okay? You're going to give us the comps, and we're going to research the comps. And the comps have to be 130 grand or more. Otherwise, you shouldn't be in the project, and we're not going to fund it. Because if something goes wrong on your end, okay, you're not going to pay taxes, okay? And so the costs, there's a risk from our end of going on a short sale to say, look, we've lent you the 70, we want our money back, and you've only halfway finished the project, okay, and we're looking at getting our money plus the interest back. So we want to make sure there's enough of a cushion in there for you guys to be able to do that, and that's a protection for you, and it's a protection for us. This is my opinion, okay? I'm not necessarily speaking for anything else. So we want comps. And we want to make sure that you have available resources to do the work. If you're going to do some of it yourself, that's good. In today's COVID world, we know that some of our clients are struggling with getting the right people. You know, like let's say you can do everything, but you can't do plumbing and electrical. We want to make sure that you know you have somebody there, again, as a protection for you, that's going to be able to do the work in a timely fashion. And that's challenged a lot of people in this COVID world. So when you're doing projects, you want to do your homework and get those things lined up and talk to your private lender about what you're doing. One of the key things is, in my opinion, is communicating with your private lender. Okay, tell them what you're doing. Don't assume, as Michelle indicated, there are all kinds of people out there and projects that we could lend money to, and don't assume that your private lender and you are on the same page. So the more you can provide them, the more of a comfort zone they're going to have with you, because most of us are looking for a long-term. Most of my business right now is repetitive. Once people lend with me, okay, and then it's referral. They give I don't have a website, I don't advertise, I have 8 to 10 ongoing projects all the time, and most of it's referrals, and we do save some room for new people as well, because we were new in 2014. We came into FREIA not knowing anything, and I have a consulting business, which is my primary source of income. I started that, I loved it so much. I started another business, which was, Light Group. And we've been in there, and we've gotten a lot of support from the people. So one of our key things, and this applies to you when you're rehabbing and starting out, is make sure you have a strong team. I have a team of people. I have a mentor. Okay, I still have the same mentor I had. I have an attorney who gives me not only legal advice, but he gives me advice to stay out of trouble. Okay, and I have other people I can call up, people I do that have done rehab works for me. Well, what do you think about this? This is kind of a project. We haven't quite done this before. Right now we're inching into, we're doing our first commercial deal next month. It's going to be, we've been primarily in residential, and we're going to go commercial. And I wouldn't be able to do that unless I had people in here that I could contact that know what I'm doing. Also, your accountant, you want an accountant that knows if he does it, or knows his clients, knows the real estate business from your end, so when new things come up, they can recommend projects and things for you to do so you can save on taxes and be proactive. I recently switched accounting firms because I didn't have that. I had my old accountant that he's a wonderful guy that we dealt with for 30 years. But we switched to a firm that has clients that do rehabbing. And they do that, some of this stuff, those accountants do it themselves. So this is the kind of team you want to start to look for, and we're a part of that. We're a part of that team, and there's a good chance we will want to know who your team members are. Okay, we're gonna sort of vet that out, and that's going to give us more confidence, and you're going to come up higher on our list that say, geez, I really want to lend to this guy, okay, because he's got his stuff together and a plan, and we don't require a lot of written information, things of that nature, and we structure our loans fairly simple. So you don't have to get a calculator out or get an accountant or financial, person out to figure out what you owe. We do simple interest and things of that nature. I don't know what the other lenders do, but we keep our and we work with the attorney to do that. We keep everything as simple as we can, so you're not burdened by that. Anyway, I don't want to take up the whole time.
And you're mentoring as well.
And we're mentoring as well. And that's part of our give back policy. You'll find a lot of people here will mentor because it's a, if you don't give, you're not going to get. Okay, in my world. And yeah, and if you give back a bit, you'll get it back.
And I think to further answer your question, and just so everybody has an idea, I think you had asked about interest. I think private lenders will vary from, I've seen as low as 8% all the way up to 16%. So depending on the borrower and the lender relationship in the deal, you'll see somewhere in that range.
Joe, did you have a question back there?
Someone comes to you with property, and how often do you guys go through the property? Sometimes, always,
Well, if it's a new borrower, we'll go and take a look at the property. I got to go out tomorrow and see one. If it's somebody that we've been dealing with and we've been successful, it's just give us the comps, we check it out, and you're good to go. So it's quick. But again, this is the trust and the relationship that is built up over time. But if we don't know you, and we don't know how you make decisions, and the strength, everybody has good ideas up front, right? But if we don't know that, we're going to go out. That's a great question. We're going to go out and look at the property, either with you or just on our own.
Yes.
A little bit of a follow-up question. What would you recommend for someone who has entered into a contract that has it stipulated that you will not have any more access to the property until closing. So if it's a new person coming to you saying, I would like this property funded, but I don't have any more access to the property, would you be willing to do something with pictures and videos, or are you sending them to someone else to fund them?
We would be willing to do that. We personally, our company, and again, this is also based on the strength of our relationship. If some of these things, these marks aren't checked off, and we think there's a weakness in there, then we would be more hesitant. We would sort of add it up, and that's very subjective.
Okay.
Part of the problem is that, especially in this market, everyone is signing contracts that they're not getting any money, that they're using their own money, there's no private lender, and then you call up and you say, I've got to get my private lender in the house, and everybody goes crazy. So you're right, a lot of them you're not going to get in.
We do drive-bys minimally. In addition, we look online for violations. So there's a couple different parts of that. You know, a lot of times too, we are able to gain access where you might not be able to based on our relationships with realtors, wholesalers. So a lot of times when, you know, clients don't think that they can have access any further, you know, based on our experience and relationships, we are able to get access. But minimally drive-bys and lots of research as to, you know, the property and violations and certificate of occupancies and all of that.
We have a question online. John Sherry asked, what legal regulations do private lenders have to know, like anything involving Dodd-Frank or SEC regulations?
From the standpoint of Dodd-Frank, you don't want to lend to anyone that is going to be owner-occupant. No hard money lender should ever do owner-occupant. Beyond that, there are not, other than the fact that you cannot be usurious, so you can't charge 32% interest. You can't charge 12 points and 16% interest. It's usurious, and if you do a transaction that's usurious, not only do you not collect the interest, your principal is wiped out.
Wow.
But we're going to rely on good attorneys to advise us.
And the follow-up question to that, if I sell a house, can I hold paper on it?
I would have the same recommendation with regard to the fact that you don't want to lend money to owner occupants. I know there's a couple people in the room that would disagree and have done it. I just think it's a terrible idea. It's much more difficult to foreclose on an owner occupant than it is to foreclose on an investor.
Keep going. Joe has been silent this whole time. Joe, say something.
Yeah,
The love of God.
I was gonna say, I've got a bunch of things, and one of which is, Steve's the attorney. I absolutely always agree with him, but sometimes I take a different approach.
Yes, he does.
Yes, I do. Yeah. I also buy mortgages. Actually, most of what I do is I buy mortgages, and I like buying owner-occupied mortgages. And so actually, a little while ago, I sold a property it's not technically owner-occupied, but no, I think if you're a corporation in New York, it has to comply with Dodd-Frank, and you need an RMLO. Difficult in New York, but possible. There are two that I've spoken with that will do it. But as an individual, if you're a private individual, absolutely you can sell it to an owner-occupant. And if you don't want to keep the paper, I'm more than happy to talk to you. I like buying that paper. But as far as what I was going to say on the first part of this, there's 3 people here, and there are probably 6 different opinions.
I mean, Joe likes owner-occupied because, let's be honest, if you're going to lose the house that you have your children in, and it's just different than if an investor loses an investment. So I certainly get why he would want to do it that way, but from a legal standpoint, I still recommend against it.
Right, but, yes, absolutely, but, and if you're a corporation, there's a lot more, or an LLC. It is more difficult to do it. But if you're an individual, you're not subject to Dodd-Frank, to 3 and 12 months. So that Dodd-Frank does not apply in that case. As far as the foreclosure, yes, it is all foreclosures are a problem. But my experience on an owner, and I'm not looking to push owner occupied, I don't want to get off topic. And part of my problem is I can talk all night about mortgages. Because one of the things I was thinking of starting is some people always ask me, when did you start? And I started a long time ago. If you remember the Black Monday on Wall Street is when I started. So that was quite some time ago. But in any case, there's a lot of things. But of the things that I look at on a property is I look at the property from the value, the repairs, the cost, and I don't know, your question about not getting into it, I'm going to agree with everybody else. It depends upon the relationship. If it's a new deal, we haven't spoken before, honestly, from my side, it's going to be a problem. Because I don't know, I have no idea about your experience and your opinion about the property. So I look at the property. What's the value? What are the repairs? What are the costs going to be? As much as the property, I also look at the person. What's their reputation? Their track record. And credit is a factor, but it's not a determinant factor. I've done deals for people that have next to no credit, but the story made sense. The most recent one was they had they paid cash, had a very thin credit, it didn't have any credit profile, and somebody told them that they should get credit, so they got an account at Home Depot, charged it, pay it off the next month. Every month they did just like they said, charge, pay it off, charge, pay it off. They got COVID, were in the hospital, and they went delinquent. So their next to no credit became bad credit. That was not a problem for me. It made sense. Their income was very good, and so far it's turned out to be a very good deal. The third thing I look at, so I look at the property, the person, and the third thing I look at, as everybody does, is what's my exit? How am I going to get my money back? The thing that is always one of the top of my mind is how am I repaid? The private lenders are interested in return of principal more than return on principal. I certainly want the return on principal, but there's no point in doing it, but I'm key on how do I get my money back? How secure is this? And my thing on credit is I'm not saying I'm looking for people with bad credit by any means. If you've never paid a bill in your life, I have no reason to think that you're going to like me that much. One of the things I did, I looked at a deal, and this was a deal that the guy came to me, and I went out, I looked at the house. It was a lot of people would not lend on it. It didn't bother me that much. Yeah, the back wall of the garage wasn't there, and some other things were missing, and yeah, there were walls missing. But all of that could be fixed. That didn't worry me. But what worried me was the guy kept calling every day, calling and texting every day. When are we going to close? When are we, this is a great deal. I need to close. I want to close. So the more he called, the more concerned I got. It's like I used to, in one of my lives, I worked with a subprime lender. And you know, went to dinner with their underwriters, and they said, the one underwriter said, you know, if we tell people and they keep calling, if you need an answer today, you know, if you give us time, we'll try to find a way to make it work. But if you need an answer today, it's no. And the more this guy called, the more I was like, you know. So I started doing more digging, and I did a background check. And he told me right up front he had credit problems. I mean, I knew it walking in. That was, but as I looked at it, as the background came back, he had a lot of property, and that was part of the deal. It was, he kept offering other properties as collateral. All of this could be done. And I looked and I said, you know, I looked at his legal record. This guy is way too familiar with foreclosure for me. His version of foreclosure is eating breakfast. And I'm going, yeah, no, so I passed on the loan. I said, I'm sorry, I just don't think we would be a good match. Because I'm not looking for problems. As they say, it's mailbox money. I'm looking for a nice, easy transaction.
And speaking of that, not every borrower and lender is going to be a match, and that's okay. You know, so just because you want a private loan doesn't necessarily mean that a lender's going to lend to you. It has to be the right match.
Yeah, we had a question in the back there.
Yeah, with the real estate climate right now, how are you justifying the ARV with the properties? Because I mean, they're up for 70,000 for sale, but they're selling for 130. You know, and you pull the comps from 2 years ago, a year ago, and they're just not justified. Are you making adjustments to all that?
Well, our comps are there. Our comps are high. The comps are high because the real estate values are high. So the people that we are dealing with are looking at the, you know, they're getting the properties through like wholesalers and things of that nature that are still a good value. That's what I'm experiencing. Okay, but yeah, properties are high. If you are trying to buy on the real estate market and do something on that, you're gonna be too high for a project. So you have to go, you know, before that property gets listed, and either work with, you know, you work with the. I think the easiest thing is to work with the wholesalers. They got several wholesalers here that are excellent. You know, you try to hook up a relationship with a real estate agent and work with them to get properties before they go on the market. Because sometimes they know of properties, but they're not in a condition that they can list them. So those are properties that are ideal for people like us. And so I find personally that the properties are high, but the ARV is as good, if not better, than it was pre-COVID. That's just my experience with the people I'm working with. Okay, and that I think attests to their experience and their team. You know, getting the right properties, because still, when properties are in poor condition, the people are not interested in those. You know, the housing market where you see all the prices go up, they don't have time to do the rehabs. I have a son, we just bought him a house. He has his own business. We didn't have time for him to go in and do the rehab, so we bought it on the market. Because he would have lost more money rehabbing the house, okay, and doing it that way than he can do on his business. So we bought it retail. Okay, so in my experience, the comps are still there. The only thing that COVID has done for us is that it's extended probably 30-40% of our business out 3 to 6 months. So this leads me to a comment I want to make about what happens when things go wrong with the plan. You know, you've got a mortgage that you've got to pay off. Ours are typically balloon payments. You know, you borrow the 70, you pay it in a year, or before, when you sell it, you pay us the 70 plus the interest. Now, what happens if you need more time?
Or more money.
Or more money? And I've had one deal, like what I do, I don't know, somewhere between, I probably average 8 deals a year. And I've been doing this 2014, I've had one issue. And I still do business with this person. But we had to have talks. I had to, you know, we're bankers, but we're not bankers in the traditional sense. We're your partners. So when things are going, you see things, the sooner you let us know to say, you know, Michelle, Joe, Mark, you know, I may need some more time on this. Okay, now we get the sense that, yeah, fine, okay, and I need more time because of this. Usually it's because in COVID, I couldn't get, sorry?
No,
Okay.
I'm trying to get Leon's
Oh,
attention.
okay. So usually you need more time because you haven't got the crew, you know, to do the work that you can't do yourself. Or, you know, in this particular case, there was a oil tank buried in the ground in back of one of these houses that nobody knew about. And when the rehabber found it, you know, they had to make all the corrections, and it cost them more money than they thought. So we had to throw in, we talked to them. We were willing to throw in some more money. We got a whole deal out of it, and we have a business relationship that's going forward. So I have not had to do, you know, like Joe was saying, I have not had to do a foreclosure ever. That's the nastiest word I could ever think of in New York State. You know, if you were in another state, that's a different deal. But in New York State, that's time consuming, taxes are costly. You know, you're probably looking at losing some of your interest and principal, and, you know, taxes aren't being paid. The property is sitting there, and you know what happens to a property when it sits there? It deteriorates, you know, it's not heated, you get mold, the basement floods up, and all of a sudden, you know, the rehab that was supposed to be 30 is now 60. So it's very important to keep us, even when things are going well and right, you know, we like to hear from people to say, okay, this is, and if we don't, we reach out to say, give us a status of the project. And we don't want long-winded written stuff, but sometimes we ask for pictures. Give us a picture of what you've done so far. And sometimes with new rehabbers, we might actually set up a draw. We can set up a draw with ourselves. Steve has done draws for us to say, look, okay, we're gonna do this project for you. You want 30 grand, we're gonna give you enough to buy the property. We're gonna give you the 30 grand, but we're gonna give you only 10. That's enough for you to hire the contractor, okay, do some work, show us the work's been done, show us the invoices, now you're gonna get the next draw. So there's different ways we can structure that when we are looking at people who don't have that experience. So we're looking at it not only but when we protect ourselves, we're protecting you. Because nobody wants to have a bad deal, right? That's not what we're in here for. We all want to be successful.
Yeah, a couple of things. One of which is, you know, I think Mark does 100%. Michelle does may do 100%. I'm not a fan of 100% lending. I like the buyer or borrower, whoever it is, to have some skin in the game. I like to see equity. I like to see skin in the game.
So do I.
But and somebody, you know, if one of the questions we had or had been given was, you know, factors that give the greatest comfort level for saying yes, and it goes along with some of Mark and Michelle had mentioned, the more documentation, see, on private lending, people figure they can come up and say, hey, Michelle, I'm Pete, I'm a nice guy, blah, 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 I want to borrow 100,000, one thing close. And it is a little more complicated than that. And I like Michelle's sheet, if you don't have it, I do like it. It brings up a number of points that I wish I had seen it before I wrote mine. But the more documentation someone can provide me, the happier I am and the easier it is for me to agree. And I had an example, and a lot of my conversations are on things I've done or not done and why. But a borrower had been turned down. They'd been turned down by, I don't know, a number of people. So when they came to me, I think they were referred to me. They came to me, it was not the easiest deal in the world, but and I looked at the house, and interesting house. But they had documentation. They'd gone to a bank, they had an appraisal, they had contracts, they had this, they had that. I was going, yeah, this looks good to me, when do you want to close? And so it was easy. And the more information you can give me, the happier I am. Does everybody give it? No. Sometimes it's a harder deal because I've got to work around not having the information. If I have to work around, I do it, I do it. It takes longer, it's harder. But if somebody provides the information, and in this case, I mean, I was like, holy mackerel, I love this. Literally, I swear to God. I went out, I looked at met the people out there. We walked through the house. That day, when I was standing there, I said, fine, great, when do you want to close? It was, they had everything. It was easy. It's when I've got to pry it out or try to divine it, I have to do background check. I've got to do this. I've got to try to figure things out. That's what makes it harder and takes longer.
Yeah, we all know that, that 10% of the problem child, if you have one, that's going to take up 80% of your time, and we want to avoid that. So sometimes if you're giving us what you consider bad news, that's actually good news for us. Because now, now we can address it.
We had a question.
Yeah, I just had a question, actually, to, is there a minimum loan amount? And also, if we do a loan with you guys and we rehab and flip the house, say 90, 120 days, is there like a 6-month prepayment penalty? Do you charge interest for the whole year? How does that work?
We don't have any early repayment penalties. We don't have any minimums.
I think the key thing,
Most of the people I do closings for have typically like a 4-month minimum, which really is nothing, because even if you get a purchaser, even if you didn't have 2 weeks of rehab and you put it on the market and the new people have to get a mortgage,
Right.
you're in 3-4 months, so it's not that significant a thing. But nobody wants to lend you the money to have you buy the house when you had no intention of actually renovating it. You were just borrowing the money to buy the house, and then you flip it to somebody else, you give them their principal back, and $12.53 for the 6 weeks of interest.
Yeah, if you do that to us once, that's going to be,
Don't
when you come back, we're going to be very reluctant to do another deal with you. So I think our minimum was 50 grand. I think that's the lowest we've ever lent money. And like Steve says, I think our quickest turnaround was probably 3-4 months type thing. Yeah.
We have very flexible terms, depending on the interest rate and the points. You're able to customize your loan based on what your needs are, but typically we do a 6-month prepayment penalty unless you choose to pay points, and then there's no prepayment penalty. I did want to add one more thing when you were asking about ARV. I'm also a real estate broker, and I've also been in banking. So with the changes in the market, with the changes in interest rates, I think that looking at ARV regularly is very important, not just for the lender, but for the borrower, because a lot of times borrowers and buyers are so anxious to get a property and so anxious to get things started that they're paying more for the property than they should, and there's not enough built in for them to make money. They have to think about the buying costs, the holding costs, the selling costs, the real estate commissions, and depending on what the rates do, what our economy does, the real estate inventory, that can all change on a regular basis. So I think it's important to look at all of that, frequently.
And one thing on rates, I was thinking this morning when I looked at the news about this meeting tonight, and I'd also been in a meeting a couple of weeks ago. A number of my meetings are nationwide. I am willing to do things outside of New York. What the guy had mentioned, and looking at the paper today, with the CPI at
7.9.
7.9. I forgot if it was 6 or 7.9%. We know rates are going up, and so long-term loans are more difficult because rates are going up. Short-term is one thing, but your base rate, your inflation rate. I mean, this whole thing is the same thing as the bank. How much banks lend on their cost of capital plus 2% spread.
Here's interesting, which I work with this particular rehabber on occasion, and he does a lot of stuff in the city, and he does short rehabs, and so what I do is he has property, and we take a mortgage out on that property. He's not rehabbing that mortgage, but it's my collateral, and then I lend him, let's say, $100,000 or whatever we agree on, and then he gets that whole money, okay, based upon this property. And then he takes that money and he does his quick rehabs with. So there are some other ways to skin that cat if you're in this mode of I want to, I've got this speedy engine and I want to start to grab properties, rehab them and flip them. That's a way to work with one of your private lenders that we do that, for example. So if you communicate with us again and you lay the cards on the table, there's more things that we can think about and offer. We can think about things maybe we've never done them before. I don't know. I probably know this much about private lending, but I consider myself a successful private lender. I've been doing it since 2014. And I have a substantial amount of money out there. So we can be creative, and we're looking to be creative with people. From our point of view, we're looking to make we're looking for a win-win. We're looking to make you guys successful rehabbers, and we're looking to be part of that team, and in both ways, in the moral satisfaction of it and in the monetary satisfaction. So this is a win-win. And that's part of most of the people I've met at REIA have that sort of mentality.
We've got a question from Zoom. From Jim Bice. If someone was looking at this solution, should we establish a relationship with a lender ahead of time? And if so, how much lead time is needed for that relationship to mature?
Yes.
Good answer, Joe.
Yeah, agreed. I mean, a lot of times too, when buyers are buying properties, they want to have that lender lined up so that they can make a cash purchase. Some lenders will provide proof of funds letters, some won't. We will, based on relationship. So yes, it's important to develop that relationship. It can be email communications, text communications. Now that COVID is dying down, you can meet for coffee, but it's part of building your team.
Yeah, I have people that, and I'm sure that Mark and Michelle do, but people come to me, in the morning and, hey, Joe, I'm Pete. How are you? We're good friends. I want to borrow 100,000. Who the hell are you? I don't know.
No.
So, yeah, it's nice to have a relationship first.
Yeah, and the relationship is built on, not only you guys having a plan, having some, when we see you're planning this out, that's good news for us, okay? If you have trouble in your plan and you think that's bad news, that's good news for us, because we can maybe offer you somebody to help you with that, okay? And then the relationship gets up on doing the deals. So, so that's how it gets built up slowly over time, and then we're more comfortable with doing more deals. We try to spread our stuff around. We personally don't like to do more than 3 deals with one person.
Yeah, and it's, I'll go with that, but as everybody's been saying, it's relationship. And private lending is relationship lending.
Yeah.
And social media helps a lot. There's a lot of real estate groups out there now, and you can see, what the buyers are doing, what communications they're having online. So you get a sense of who they are, partly through that as well. Sorry to interrupt.
No, that's okay. But I was
I think
thinking
this
as you were
guy's
saying
been
that,
waiting.
unless you're dealing with an old person like me.
Yeah, we have a couple of questions.
Waving his hand over
Yeah.
here.
So,
This question for Steve. Have you ever had any issues with working with someone legally when it comes to if they're more regulated with FINRA or SEC or anything along those lines?
I'm sorry?
So,
Accepting Steve figures.
If has anyone came to you that's regulated by the FCC, or that's regulated by FINRA, is there any legal complications by working with them?
I always would refer you to a specialist that only did that sort of work. There are a number of law firms that did that. I've learned over the years to do what I do well and not to not do what I do well. So, I refer people to other attorneys all the time. If I'm not comfortable doing it, I'm the first person that'll tell you, it's not my thing, let's find somebody.
we had a question from Joe.
Yeah, I got a question. Let's just say someone comes to all 3 of you, and it's a $150,000 house. The market's going crazy. The guy thinks he could probably get more than that, but he's got to buy it for 100, and it needs 20 to 25. Let's just say you get 180, but the comps, the comps are showing 150. Would how the market is, all 3 of you, yes or no, would you loan on that property?
I just had that come up to a property in Webster, and I offered the rehabber an option, because I wouldn't fund the whole deal.
Yeah.
Because what you see in Webster is you see the comps are going up like that, okay? And how long is it gonna stay like that, okay? So I look at the history of the comps as well as that curve, because if it goes up, fortunately Rochester has not experienced that, but the housing market's been probably the strongest it's ever been, and nobody knows if it's, when it's gonna dive, if it's gonna dive, how low it's gonna dive. But yeah, I'm cautious about looking at comps that all of a sudden, last year they were here at 100, and now this year, the same house without any rehab is 180, 200,000. I was gonna fund that house, but I wanted to partner with another lender, and they couldn't find another lender, so I walked on the deal.
The prices are scary. I had somebody sell a condominium in Eastbrook Condominiums for $220,000. I mean, we celebrated. It was insane. He bought it for $125 5 years ago. I don't think anything in Eastbrook condominiums is sold for $200,000, but that just tells you what this market is today.
But it would have to be a lower loan to value so that there was some protection in there.
Or bring in another property. I've done deals where, the property was kind of questionable, but they had equity in something else. So I'm happy to spread a loan. That's fine. I'm
Go ahead.
I had a question for you guys on deal structure. Let's say it's a bigger property, a commercial property, where the seller is willing to seller finance the acquisition of the property, but we're looking for some funds for the renovation. Is a structure like that something you'd ever consider, where it's a mix between the two, or do you stick to just a straight acquisition and rehab?
I don't want to speak for anybody else, but from my position, I'm not going to go second behind on a commercial. I'm not going to go second.
It was to Steve's point about first and second positions before, so that I
Yeah,
appreciate
we
that.
only do first lien position.
Got it.
Well, on that same thought, would you ever pay off the first to be first?
It just depends on what the deal looks like.
Of
It's
course.
possible, sure.
You're not opposed
Sure.
to that?
Yeah,
No.
yeah,
No.
if there was, yeah, that's a good point, yeah, sure, yeah.
But also, like they were saying, if you have another property that you own free and clear,
Mhm.
you can put a first lien position on that property and use those funds to do your rehab.
Got it. So there's maybe a
Lots
creative
of
loophole in
options.
there, but
Sure.
it's
Yeah,
comes
it-
down to that.
Yeah, it's a conversation, and what I had on the top of my thing here is I invest in private loans. It's and because this is personal lending, I anticipate having a conversation and say, what are the facts, what can be done, what's the deal?
I have a private lending colleague who actually did a loan on a borrower's vehicle that was a higher end vehicle, and then used that money to do their rehab. So there's a lot of, I never would have thought of that before. There's a lot of.
I have a client that wants to do that now on a Ferrari.
Yep.
Wow.
If this
But-
was on a Porsche.
But they haven't changed title yet because they don't want to pay the
Yeah.
sales tax on a $200,000 car. And if they don't change title, how do I get a lien?
Yeah.
So I don't think we're doing it, but people are doing crazy
This is
things.
what Steve does so well.
Yeah, I had one like that, and I was like, well, and the guy called, and immediately the attorney's on the phone, and they want to do it, and I'm going, well, yes, I will do it, but it has to be parked in my garage. And they're going, no, he's got to drive it. And I'm going, I am not chasing this thing around town. Forget it. If it's in my garage, we'll talk about it. If it's someplace else, no, I'm not doing it.
Go ahead with your question, please.
Will you do collateral with precious metals?
Possibly, but from my perspective, I want to hold it. Or I want to control where it's held. I don't want the borrower walking away with my collateral.
You don't want me to keep it in my safe?
Yeah. No.
And we would probably
No, we take it
discount
ourselves.
that, so if you thought you had 100,000 in precious metals, we might only consider it 60% of that or something.
Okay.
If we're not familiar with precious metals, like I'm not. If I was familiar with something, then I could say, yeah, I have more confidence, but we would look at a discount on that.
Yeah, loan to value. The market fluctuates right now. Metals are going crazy. Who knows, in 2 months, what was it? A couple of weeks ago, nickel, I forget the exact thing. Maybe it was one for $20,000. Now it's $120,000 in 2 weeks. Well, 2 weeks later, it might be back to 20, or 30. So, yeah, you got to keep. Right now is very,
Volatile.
volatile is the good word. Thank you. Very volatile times and very volatile values.
All right, we just lost Zoom, so this laptop doesn't charge and the battery pack is no good, apparently, out of nowhere. Brand new laptop, so we're offline.
So this,
I don't think it'll fit. Does it plug into a Lenovo laptop? No. Okay, thank you for offering.
yeah. So I think we're okay because right now we were like up to the last question. So what we're going to do, is I'm going to allow one last question that folks may have. This will be the last possible one. Okay, no takers, all right. So what we're going to do is we're going to stop this formal portion of the presentation, and we're going to give you an opportunity to sort of talk to these folks individually, do some networking. Couple of quick items. Right here in front of you, you basically have an attorney who is really great at doing real estate. That's the type of attorney you want. I'll pick him any day to do my closing, my items that I need to do from a real estate standpoint. Okay, so the other thing I want to say is this, what you see here is 3 people who are part of Freedom First that are private lenders. There are a lot more private lenders than Freedom First. And what you need to do if you're interested in private funding is to get to know some of those private lenders. There are some sitting in the audience. They're not going to let you know who they are because they want to have a relationship with you, understand what it is you do, how you do it, and over time actually come to the point where they feel comfortable providing private funds for you. So that's important that you recognize that. And the other key thing that you recognize is that every private lender that you have each one of them have their own approach, terms, thoughts, ideas, and how they're going to do things. And you need to work that out with each and every one of them because after all, it is private money. So that said, I'm going to break now, and thanks everyone for being here. Thanks to our panel for doing a super job, and we look forward to see you at the next meeting. Thank you.